Hi, I'm Sam Slater from Fund Calibre, and today I've been joined by Peter Michaelis and Simon Clements, managers of Liontrust Sustainable Future Global Growth and Liontrust Sustainable Future Manage. Hi.
Hi.
You've identified 3 megatrends worth investing in. What are they?
The 3 megatrends that we invest behind are that our world and our economy evolves to become cleaner, healthier, and safer. And really, if you look at how economies develop, they don't just kind of grow in size, they change in the nature of what's going on within the economy. And you can look at these trends as being the really persistent currents within our economies. So, take medical advance. I think one of the most powerful statistics is that at the turn of the 20th century, if you had a child, they had a 1 in 5 chance of not making it to their 5th birthday. Today, that's more like 1 in 250. So you get these massive improvements in terms of quality of life. And the same with resource efficiency. You only need to think about lighting as we go from oil lamps to gas lanterns to incandescent lights to LED lighting, which makes lighting cheaper, much, thousands of times more energy efficient and hence available for all. And it's these trends to a cleaner, healthier, safer world, which we invest behind. We find companies linked to those big trends because these companies have a positive impact. So they help to improve the planet and our lives, but they also experience stronger growth than most market participants believe. And because the novelty of the solution that they're providing, they tend to experience less competition. And that really underpins, is at the heart of the sustainable future investment process.
And Simon, could you perhaps give us an example of a company that fits into each of those trends?
Yeah, hi. So in terms of more efficient, a great example we love to use in the portfolio is a company called DocuSign. And I'm sure many people out there will use DocuSign. So DocuSign is a technology that allows you to digitalize the last part of the document creation process, which is the part where you sign. So everything is digitalized in the process, except for that last bit where you have to print everything out, sign it, send it in the mail, very inefficient. So DocuSign, allows you to do that, without the need to actually print out all that paper. Obviously saves huge amounts of resource. Also, it saves a lot of time and money for businesses and makes the world more efficient. So that's a good example from an efficiency, from that more cleaner, efficient theme. In terms of healthier, a great example we love to use is a company called Intuitive Surgical, which is a US-based company, which is the global leader in robotic surgery. So robotic surgery is much, from an innovation point of view, it's just such a kind of better product because it reduces the chances of the person who's having this surgery actually having some sort of injury related to it. And also the incision that's made is much, much smaller. So you have a much less blood loss and things like that. So, it's a much better experience for the patient. It's much better for the surgeon and much better for the hospital because people are in and out of the hospital, with less hassle. And the last one from a safety point of view is we love to use the example of PayPal. Now, one of the most important areas of the world where we kind of want to be safer is, when we go online and purchase things online, which we do more and more these days. And PayPal has created a product which means that each time you purchase something, you don't have to keep giving each different company that you're purchasing something from your card details or your bank account details. You're never quite sure, especially if you're doing it constantly, that this information will be looked after. But with PayPal, you give it to one person and they look after it. They also ensure that the people who you're transacting from tend to be safer anyway, because if there's something fraudulent that happens on the PayPal network, that seller is kicked off. So it really makes that kind of whole experience of purchasing online safer and makes our world safer. So they're 3 examples we love to use in the portfolios.
Thank you. And the managed fund that you run has the Global Growth Fund as its top holding. Why have you invested in that fund as well? Do the top 10 holdings of both not overlap quite a bit?
Yeah, it's a good question. So, I mean, the managed fund invests effectively in the exact same portfolio as the global growth fund does, okay? As does the UK portion of the managed fund is identical to the UK part of our single strategy product. So the managed fund is basically a building product of we use these products as building blocks to create the multi-asset funds. The reason it's actually invested in the SF Global Growth Fund is because we use those stocks that were sitting in that managed portfolio. There's a kind of large portfolio in there, and we created a product that we were able to basically sell on. So we use that money to seed a product, basically to sell to our international clients. So effectively from the person who holds the managed fund, it makes no difference if you hold the underlying stocks or you hold this product which hold the underlying stocks. And, clearly it doesn't, the managed fund doesn't have to pay anything to have this product. We just use the assets within there to wrap up a product to create something that we could, use to sell as a kind of seed capital type thing. But from the managed fund holders perspective, it absolutely makes no difference. We hold the stocks or we hold, that single product at all. No difference.
And what bond exposure do you have in the managed fund? Have you got any green, blue, or social bonds in there?
We hold, within the Sustainable Future Managed Fund, we hold around about 20% in corporate bonds. And the corporate bonds go through exactly the same process as for the equity side. So we're selecting sustainable issuers. So these are issuers of corporate debt, such as social housing providers. Or people involved in the infrastructure of our electricity network as we move to a more renewable. It also includes insurance companies, so the debt of insurance companies, and we would hold the same issuer, so for example, a Legal and General in the equity side as well. Now, because the issuers that we select are sustainable in terms of how we define it in their own right, we don't actually look for them to issue particular green, blue, or other kind of sustainably badged bonds, because in a way they don't need to, because the whole entity is. So quite a few of the kind of green bonds are in companies who maybe are not totally sustainable themselves, but they are earmarking some fundraising for a specific sustainable good. So we don't discount them, but they don't feature massively within our corporate bond portfolios at the moment. But essentially what we are doing in the corporate bond side is exactly the same as the equity side. We're using that additional sustainability lens to identify better quality issuers of debt. And that reduces the risk that is associated with the debt for the given price. And so sustainability applies exactly the same to the corporate bond side as it does for the equity side. And together within the fund, with the sort of 75% equities, 20% corporate bonds, a bit of cash, occasionally allocation to gilts, you end up with sustainability being integrated throughout the whole portfolio across all the assets.
That's great. Thank you very much. And if you'd like to find out more about the Liontrust Sustainable Future Global Growth Fund or the Liontrust Sustainable Future Managed Fund, please go to fundcalibre.com.